Hello guys, welcome back to the Insight Sphere. So today we are going to discuss the secret behind the Bitcoin's price surge. Actually, Bitcoin is once again making waves across the financial landscape as its price experiences a noticeable surge across the financial landscape. While crypto markets are known for their volatility, this latest rally isn't random. In fact, several key economic and geopolitical factors are converging to create the perfect environment for the Bitcoin's ascent. To understand why the price of Bitcoin is rising today, we need to take a closer look at what's happening in the broader financial ecosystem and why investors are increasingly turning back to the world's leading cryptocurrency. One of the most significant drivers behind the Bitcoin's current momentum is the growing expectation that the US Federal Reserve may begin cutting the interest rates in the near future. In an environment of high interest rates, investors tend to favor safer assets like bonds and saving instruments because of borrowing is more expensive and economic growth is constrained. However, when the Fed starts to shift toward a lowering interest rates, it signals a loosening of monetary policy, which in turn fuels market optimism. Lower rates make borrowing cheaper and increase liquidity, which means investors often begin reallocating capital into high risk and a high reward assets like stocks and more notably cryptocurrencies such as Bitcoin. Traders are essentially betting that a divorce Fed will reignite economic activity and boost the value of speculative assets. With Bitcoin being the flagship of such assets, it naturally benefits from these macroeconomic changes. At the same time, institutional money is flowing into Bitcoin at a pace not seen since the early days of the last major bull run. This is no longer just about individual retail investors trying to catch the next pump. Large institutional investors, including hedge funds, asset managers, and even pension funds, are now adding Bitcoin into their portfolio. This surge in institutional participation has been made possible by developments such as the introduction of Bitcoin exchange traded funds, that is ETFs, improved regularity, clarity, and the growing sophistication of the crypto custodial solutions. These advancements have reduced much of the perceived risks surrounding the Bitcoin and opened the doors for traditional finance to join the game. Unlike retail traders, the institutions have massive volumes of capital, and their involvement not only drives up price through direct purchases, but also signals to the market that Bitcoin has matured into a legitimate investment vehicle. On the global stage, if you say, there are encouraging signs of easing geopolitical tensions, particularly between the United States and China, as trade negotiations appear to be improving and diplomatic communication resumes. Global markets are responding with a renewed sense of stability. For Bitcoins, this matters a great deal. In times of uncertainty, Bitcoins often act as a hedge, with investors using it to protect against fiat devaluation or a geopolitical unrest. However, the flip side is also true. When markets stabilize and fear recedes, investors regain the confidence to invest in high risk assets. That includes cryptocurrencies. As optimism spreads across the global economy, capital begins to move from traditional safe havens back into a riskier, growth focused investments. Bitcoin, benefiting from both its role as a hedge and a high return opportunity, becomes a prime destination for this renewed appetite for the risk. There's also undeniable momentum factor that comes with any Bitcoin rally. Once Bitcoin starts gaining ground and breaks through the key price thresholds, it often sparks a psychological shift in the market. Retail investors, many of whom are previously on the sidelines, began re-entering the market out of fear of missing out. At the same time, mainstream media coverage ramps up, social media buzz returns, and influencers once again become vocal proponents of the next bull run. The result is a self-reinforcing enforcing cycle. As Bitcoin's price goes up, more people buy in, which drives the price even higher. Altcoins often ride the wave too, further amplifying the bullish momentum across the entire crypto ecosystem. Beside that, to make sense of this price action and what might come next, investors are keeping close eye on the few critical indicators. These include future decisions by the Federal Reserve, particularly regarding inflation and interest rates, as well as continued inflows into a Bitcoin ETFs and any development in the US-China relationship. Technical factors such as trading volume or price resistance levels and play a significant role in determining short-term trends. As more positive signals emerge, confidence in the market grows and Bitcoin's upward momentum strengthens. So, if I summarize the whole scenario, I would say that Bitcoin's latest price surge isn't just a flash in the pan. It's the result of a complex interplay between the macroeconomic policy shifts, institutional adoption, and improving the global stability. With the rate cuts potentially on the horizon, institutional capital flowing in, and the broader shift in investor sentiment, the market is setting the stage for what could be the next major leg up in Bitcoin's long term trajectory. While no really comes without risk, uh, and the crypto market remains as unpredictable as ever, it's clear that Bitcoin has once again captured the attention of the financial world, and this time it might be here to stay. So that's all for today. Please like my video and also like and subscribe my channel. So till then, take care of yourself.